look at the broader markets to see where they are, and that seems to be the trend there as well. In fact, you have the mid-cap index with cuts of about 0.5%, and we are very close to the low point of the day as we speak right now. And the small-cap index also trading with cuts of about 0.4% or thereabouts. And let's take a look at what's contributing to the benchmark Nifty 50, and that will give you a sense of what's dragging the benchmark even as we speak. And you have the likes of Infosys as well as Nestle and M&M that are leading the declines. And HDFC Bank, for once, is proving to be a bit of support for the benchmark index. Let's also very quickly take you through the sectoral heat map to give you a sense of what is doing well right now. And most sectors are losing ground, including the Nifty Bank, which is under pressure in trade today. Or actually, it's flat at this juncture. In fact, along with the finance index, which is trading just about above where it closed yesterday, but all of the other major indices trading in the red. Mahima, BSE is in focus today because of a major downgrade.
Absolutely. So BSE is in focus, and some other counters which are also buzzing. We'll talk about BSE in more detail going forward. But some counters which are, really seen a lot of, traction in trade today includes Tata Industries, which came out with its Q2 FY25 numbers, where revenue was up 12%, net profit up 9%. But Investec came out with a note which gives an upside of roughly 29%, and the stock is up 17% itself today in trade. The next is Reliance India, again on the back of Q2 results, where revenue is up around 12%, EBITDA up 25%, and margins have improved to 17.9% from 15.9%. So another stock which is buzzing in trade today and up around 14%. But as I said, we'll discuss BSE in more detail, and we have Harsh joining in to talk to us about what the Jefferies note exactly about on BSE.
Well, the run-up has been sharp, Mahima, on the BSE counter. So what we've seen is from 2200 levels 3 months back, the stock is now sitting 4500 plus in terms of price, and therefore given nearly or rather doubled over the last 3 months. Valuation comfort therefore not sitting well with Jefferies. They've downgraded their rating from a hold to an underperform, and while what they've actually done, interestingly, is they've hiked the target price from 2850. They've arrived at a target price of 3500, which is still a 27% downside from here. Purely on valuations, they believe that SEBI's new F&O framework, of course, may be positive for BSE, but BSE will have to take 40 to 50% in terms of market share revised in H2 FY25 if valuations were to be justified, which they believe is a bit of a stretch. They believe that BSE will of course gain market share, but in a more reasonable fashion. They also believe that overall the market will decline by around 25%. So you'll see a 25% hit to overall market volumes as a result of these new norms. They believe the street is not factoring this, especially where BSE is concerned. And they believe that BSE's valuation should be a more reasonable 40 times FY26 earnings. EPS estimates at 86 rupees per share, and therefore they believe that around 3500 odd should be the stock price. That's their target price currently. Currently trading at 55 times, they believe that this particular valuation is stretched, overrated, fails to capture risks, and they expect a higher impact on overall market as a result of the new SEBI norms. They see risk reward turning unfavorable, and that's why not so constructive.
Absolutely. Harsh, thanks so much for wrapping that up for us, and that provides the perfect opportunity to go to our experts. We've got Saurabh Jain, who is Equity Head Research at SMC Global Securities, and Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher. Thank you so much to the two of you for joining in, and good morning to the both of you. Incidentally, we do have a question right at the start, Saurabh, on BSE, so I'm going to ask that, and you can tell us what your view is as well. Shivam from Gorakhpur has bought at a price of 4,186. I think that price is wrong. So 4,816 is what we've written. The price that he's bought is at 4,186. So he's still making gains right now. The question, Saurabh, I'm sure a lot of viewers who have not gotten into the stock, and also Shivam, who has bought at slightly lower levels, would you hold on or would you buy fresh?
See, I concur with the Jefferies view. I mean, the stock is very richly valued. There is a kind of a euphoria which is happening in the market. First of all, some participants are over optimistic that the BSE will grow at the after this new norms and at the expense of the National Stock Exchange when new contracts will be banned. The Nifty and Nifty contract, weekly contracts will be banned, and the BSE will gain. See, in the history, BSE has never shown that kind of a stupendous performance, and the earning estimates are quite optimistic. If you look at the valuations, also in the global context, BSE now trades about 20 times to book value. In the developed market like USA, the Nasdaq trades at the CME Group trades at about 3 times to book value, and so that for the S&P. Even if you look at the in the Asia, the Hang Seng Index, I mean that stock trades around 7 times to book value. So in that context, also it is quite richly valued, and there is a room for a huge correction. So I recommend the investor to lock in profits and get out of the stock.
All right, so it's a lock-in profits call for BSE as of now from Saurabh Jain. Moving on, the next question is from Srikar, who is from Hyderabad, and he's asking whether this is the right time to enter Dr. Reddy's for a long-term perspective, or do I have to wait till US election results? The export data also suggests that Dr. Reddy's has been auguring a good growth overall in terms of exports as well. Saurabh, I'll stick to you with this one. Is this the right time to enter Dr. Reddy's?
I think pharmaceutical pack as per se as a whole looks good to me. I think a lot of good things are happening now. So much US FDA allegations are not coming. I mean, these companies are able to actually anchor the margin fall which was happening in the US markets, and they are able to come up with the newer products. They are venturing into the newer categories, and so in case of Dr. Reddy, in the last quarter earnings season, we have seen that the company has put up a good show, and the management is also quite confident. So I for that matter, I think it is always good to buy companies like Dr. Reddy in a staggered manner.
Okay. I'm so sorry, Vaishali, to keep you waiting. At the onset, before I ask you a question, I'm sure a lot of people are wondering, in this kind of a market, how would you trade, first of all? And do you have any stocks that have started looking attractive based on the kind of weakness they've displayed over the last few trading sessions?
Well, I would say market is getting a bit difficult. It's too volatile today. The advanced decline ratio is also negative. But there are a few stocks which today, they look good, and they have given a decent breakout and with good volume. So one of them is Precision Camshaft. It's given a breakout on the daily chart, and on weekly also it's in a trending mode. So I think we had already chosen this stock right from 270. It's currently 291. So I would say 270 now acts as a support. And looking at the longer term horizon, I think this is ready to go towards 350, 400. Similarly, there is another stock which is showing strength in a market like this is Make Money Organics. That too has given a breakout with decent volume. So 113 is the breakout level. So I would say 105 would act as a support and look for a target of 125, 130. And besides this, if you ask me, well, defense stocks have corrected quite a bit. And now they look technically quite well placed to start accumulating. So we are focusing on Bharat Dynamics, Garden Reach. All these are the stocks which look technically quite attractive to accumulate from these levels.
Got it, Vaishali. In fact, defense stocks will be something to watch out for based on the election results, Alex, that come out for Maharashtra as well. Moving on, the next question is from Mr. Sharma, who's from Delhi, and he's brought 3,000 Allcargo Logistics at 67 a piece. That is 3 weeks ago, and it's currently down around 10% as per him. Today also, it's not doing much in trade, and he wants to understand whether he should hold this for a few months ahead or he should exit at a loss. Is there a possibility of recovery in the next few months is his question. So Vaishali, your view on Allcargo Logistics?
I'll just have a look.
Sure.
In the meanwhile, let's pull up the slightly longer term charts as well, just to get a sense of how the stock is performed. Allcargo Logistics up about 0.2% in the day, or just about 1/10%. But in the year so far, or rather over the last 12 months, it's done not much actually. It's down from the peak. Vaishali, what are the key levels that you would look at?
So I would say, well, there is really nothing happening in this stock, but I would say 58, 57 is the level where it has taken support a number of times. So right now in the near past only, we have seen this stock taking support 3 times. I mean, thrice at this level, 58, 59. So I guess it becomes a favorable risk-reward ratio. And maybe this stock can give a bounce up to 65, 66. Even the indicators are showing that there could be a sign of a bounce back. So it could be just a bounce back from here on for now.
Right. Just a small correction. The question was not from Mr. Sharma. It was from Shama from Delhi. But moving on, the next question is on Reliance Industries, and Sasideep is asking this question. Now, 700 shares at an average price of 2835 is what the holding is, and he wants to understand whether should Reliance be, still a hold, or should he accumulate, or what should be the strategy overall? So, Saurabh, I'll come to you for this one. What should be the strategy with respect to Reliance?
I think Reliance will always remain a portfolio stock. You have to have a mindset of 3 to 5 years, and you can get easily CAGR of 15-20%. Recently, in the earnings, we have seen some positive outcomes from its Jio business, from the retail business also, and oil to chemical business did not do as bad as it was perceived. So all in all, I think the company is moving in a good direction, and their Gigafactory is about to open in the next financial in this financial year towards the end, and that will be again next trigger for the growth for Reliance Industry. So keep holding on to your investment. I think after the bonus announcement, after the bonus date and the bonus ex bonus, I think you will see some kind of a gains coming in.
I also want to very quickly check with you, Vaishali, what the key levels are for Reliance Industries. It lost, if I'm not mistaken, over 10% in the recent past, just the last couple of weeks. And so Murthy, I believe, had a question, should it be bought at the current level, or would you wait for further downside?
So there is a downside projection coming towards 2600, 2580 to 2600 levels. And since the market is showing some sign of corrective move, I think the best is to wait and watch. I think 2580, 2600 should be an appropriate level.
All right, the next question that I'm taking is from Professor Chalam, who's writing in from Kurnool in Andhra Pradesh, and this is on Tata Motors. He's bought 66 shares at a price of 953. Let's pull up the chart and see where it's currently trading. It is at 903, having given up just a little bit of ground, down about 1.5% in trade. What is the future target? Should he buy on dips is the question. I'm guessing he's got a long-term perspective on this. Saurabh, on the fundamentals, we've discussed on this program as well, the prospects for Jaguar Land Rover. I was looking at the distribution of retail sales, and they've got about 20% of sales in China. And they've got underperformance in sales in Europe as well. So if you're talking about Europe and China that are already underperforming, is there a question mark over performance in the near term, and therefore what would you do with this stock?
I mean, you're absolutely right, Alex. I mean, the company has already given a guidance that they feel pressure in their global businesses, and their premium segment is also taking a hit now. So there is always a concern with respect to now the sales of the Land Rover and Jaguar, particularly in US and in Europe and China. And in the Indian market also, I think the sales are dipping, and these companies, all the automobile companies, are coming up with the festive discounts in fact in the festive season. So my take is a bit negative on the overall for the automobile sector, and I would not recommend to get into Tata Motors right now.
All right. Well, that's the view on Tata Motors. But the next question is from Kamlesh Majithia, who's from Porbandar, Gujarat. And this question is for Vaishali. He's holding 175 shares of Punjab Chemicals and Corporation, and he purchased it at 1180 a piece. Now, he wants to understand whether he should hold or he should add more shares to his portfolio. So, Punjab Chemical and Corporation is the stock. Your view, how does it look on charts?
So I think currently it is showing signs of improvement, but further confirmation, I think about 1200 levels. So he can accumulate at these levels also, because right now currently the stock is in the process of making higher bottom formation. The confirmation of higher bottom comes only once the stock moves about 1200, as I said, and I think that would give scope for further higher targets. So if time is not the concern, I mean, he can start buying at these levels again.
All right. A lot of our viewers tuning in from Gujarat today. Hi from the studio. By the way, Mahima's from Gujarat as well. I wonder there's a connection there. They're all saying hi to you, Mahima. So the next question, I'm not sure who this is. They're not telling us where they're from or in fact what their name is. If you can share your name, KGCP. The question is on Aarti Industries, bought at a level of 501 and also Tattva Chintan and IRFC. Which of these are a clear avoid from the perspective of long-term investments if you had to take a further position either in Aarti Industries or buy fresh in Tattva Chintan as well as IRFC? Saurabh, what's the view?
See, I will not be able to comment on Tattva Chintan, but for the IRFC, I feel that the company is good, but the valuations are on the higher side. So wait for correction. In case of Aarti Industry, I think the company is good. All the capacities addition have been done, and when the things will turn, the company will surely make money. I mean, the profits will grow. At these prices, I think there is very little room for the downside, and you can hold for the long term.
Right, Saurabh. I'll stick with you for the next question as well. Now, Hemendra Nanavati from Ahmedabad, again, Alex, from Gujarat. So it looks like, I'm bringing all the Gujarat audience to ask profit. But jokes apart, he's holding 420 shares of Netweb Technologies since IPO. And he wants to understand whether he should keep this for a long term or not. So, Saurabh, your view on Netweb Technologies?
See, the company is quite small, and it has come when the bull market was on. The valuations are on the higher side, and the correction can deepen. So it is always better to take some money off the table. So I will recommend book 50% of your investments.
Okay, book 15% is the view. Darshan Mandaviwala from Surat in Gujarat has got a question on CDSL, bought at price of 1,443. What price should he sell it at is the question. And he can hold Vaishali for I think about a year more. Yeah, so August 2025 is when he's looking at it to hold for. He's bought at price of 1,443, so he's in the green, marginally so.
I would say continue holding with the trailing stop loss because right now the stock is still showing a lot of strength. So the near-term target is at around 1650, 1680. Once we see the stock moving about that, then 1800, 1900 could be the next target. So that should be the way that he can hold this.
All right. The next question is from Nirmala, who's from Bagalkot, Karnataka. She's asking whether it's a good time to buy Angel One from a shorter term perspective or not. Now, Angel One yesterday had a stellar run on the back of its Q2 numbers. So, Vaishali, how does it look on charts though from a shorter term perspective?
So I would say even for a shorter term, we have seen a one-way rally right from 2600 to today 3400. I would not say that because the risk-reward ratio would be very, very unfavorable. But if he or she wants to buy, then I think 3000 would be an appropriate level to get into the stock.
E. Venkateramana. Okay, apologies. I'm going to say this slowly. Venkateramanan from Bangalore is asking about this. Aarti Drugs. 590 is the buy price, currently at 504 thereabouts. He's not given us his planned period of holding, so I'm going to assume, Saurabh, that he's not in a hurry to sell. Should he hold, sell or average is the question that he's asking on the fundamentals.
I think it is a very old company and a good growth. I would certainly recommend to him to hold for the long term. I think surely the operations will improve and so does the price. So I will recommend for the hold.
But, okay, just to follow up to that, Saurabh, based on the fundamentals, I think a lot of people have been waiting for a rebound. And when do you see that happening? When do you see there being a durability to the earnings that people have been looking forward to?
See, Alex, it is very difficult to comment, but you can only make a intelligent guess because of the past performance of the management and the earning profiles seen in the past. So I feel that at these prices, I think there is very little room to go for the downside. So that is why I am recommending to hold.
All right, the next question is from Jeel, who's from Gujarat again, and she's holding 100 shares of IFB Industries, which was purchased on 9th of August 2024 at 2070 a piece. And she wants to understand whether she should hold or sell the shares at present. So, Vaishali, your view on IFB Industries?
I would say the stock has given a breakout. Volume is exceptionally high, so this means it's ready for further higher targets. Continue holding with 2150 as stop loss and look for a target of 2450.
Right. We have to. Okay, we've got Cummins that we have to talk about next, and Pradeep from Haryana is asking about this. He's bought at levels of 1,450 rupees, and he's been holding for quite a while. I'm not sure when exactly, but he's got a considerable profit on this. He's also got Lupin, incidentally, which he's bought at levels of 1,700, and he's been holding again for quite a while. The stock is currently trading at 2,200. So what's the perspective from the fundamentals on both of these stocks, Saurabh? We've got Cummins as well as Lupin.
Well, Cummins on the valuation metrics, if you look at, it is quoting at about 15 times to book value, and the stock got re-rated quite handsomely in the last 1-2 years, in line with what has happened in the capital goods space. So, in my opinion, I think it is better to take some money off the top of the table. So, I'll recommend to book some profits in Cummins. With respect to the Lupin, since I am quite positive on the pharmaceutical sector, as we have discussed in the past also, like Dr. Reddy and Aarti Drugs. So I would recommend to hold Lupin. And from the operational metrics also, the earnings are quite decent. Reported earnings were quite decent.
So it's a sell for Cummins, but a hold for Lupin from Saurabh. Well, the next question is on Union Bank of India. The person has not given his name yet.
Gopi.
But, okay, she's now sent her name. Okay, all right. So Gopi from Kerala is asking for Union Bank of India. Now he's holding 1,500 shares at 118 a piece. Now he's asking how many days should he hold this one. So Vaishali, what should his strategy be? How many days more should he keep holding, or whether he should sell?
And that's not a appropriate answer for, I don't have any appropriate answer for this, but I would say that it's coming closer to its weekly support of 105. So I guess it's a matter of time, because anyways, right now, banking sector, nothing is really moving. It's the private sector banks which are showing strength right now. So I cannot define time, but I guess hold or average it out at 105, 100.
Quick follow-up then on the fundamentals, because the stock is underperformed, of course, within the banking pack as a whole. And what should you do with this? Would you hold, Saurabh? Because there are other names also, one would argue, that are reasonably priced in the banking space.
See, if you look at the valuation side, you will feel comfort in case of Union Bank. There is nothing to worry in case of on the operation side. I think if you look at the banking space, as Vaishali also said, with the whole PSU space has underperformed. Look at the Bank of Maharashtra, or for that matter, Canara Bank or Bank Baroda or Union Bank. Some has fallen more in contrast to others. But I feel as the time passes by, we'll see some kind of a credit growth happening in the second half of the financial year. And as we move towards the budget day, then also some kind of euphoria comes in with respect to the growth momentum and credit growth picking up. And at those times, I think we may see some kind of a rally coming in the banking stock. So in that sense, I think won't be prudent for me to call to say how many days it will take for the Union Bank to come up. But I think in the 3-6 months, you will certainly see prices moving up.
All right. The next question is from Srikanth, who is from Telangana, and his question is on DCX Systems. Now he's bought around 100 shares at a price of 380, and he's asking whether he should hold the stock or not. Vaishali, how does DCX System look on charts?
So as I mentioned, actually, that there is a turnaround, seems to be a turnaround in defense stocks. So this is one of them. So technically, if you ask me, this stock after a making of high of 450 levels is given a good corrective move, and now at a support level. So I would say, hold this stock, or one can buy at these levels as well, to first have a target of around 370, and then we can have a relook. It can go higher.
Do stay with us, Saurabh. Apologies. Saurabh and Vaishali We have to slip into a very quick break. We'll be back on the other side to take more questions. Viewers, we'll be back before you know it.
Welcome back. You're watching Ask Profit. Well, the viewers who've just tuned into our show, you can ask all your stock-related queries on the number that is flashing on your screen or on any other social media platform of NDTV Profit. Well, moving on, the next question is on Cochin Shipyard. Now, Arun from Hyderabad has bought around 100 shares at 1802 a piece, and he wants an advice whether he should sell or hold. Now, recent development in Cochin Shipyard has been that government is planning to sell around 5% stake in OFS, which will include around 2.5 as base offer and 2.5 as additional if there is oversubscription. So, Saurabh, I'll come to you for this one. Your view on Cochin Shipyard?
I think it is only because of the valuation the stock has taken a massive hit. All the PSU stocks which were, on the higher side on the valuation, when they were looking at the expensive, we have seen the corrections coming in. And so in the case of Cochin Shipyard, and maybe because if the government comes with the their divestment process, then more float will be there in the market, and maybe we may see some more pressure coming in the stock price. But all in all, since the company is good and he has not bought at a massive price, I mean 1800, I think he can hold for some more quarters.
Okay. Okay, Vishwanathan has got the next question and he's writing in all the way from Kuala Lumpur. He's asking about Vartec Wabag, which he's bought at a price of 454. He's got 100 shares and he's wondering what to do with it. This one's a fundamental question to you, Saurabh. He's holding on with decent profits on this one. Should he hold on?
I think the company, it's a marquee player in the water treatment segment. Recently, the company has won some order also, 1,000 crore worth of order. And the stock has got re-rated in the last 1-2 years. On the valuation side, it is looking now expensive, considering the fact that the revenue and the profitability is not to the extent which can justify this valuation. So I would recommend to book partial profits in case of Vartec Wabag.
All right. Well, the next question is from Raju Shilu, who's from Gujarat. And the question is on Graphite Limited. Now, he's holding 175 shares and he's purchased these shares about 15 days ago at 594 a piece, and he wants to understand as to what's the outlook for this particular company. Saurabh, I'll stick with you for this one as well, because I believe that it's a longer term perspective question. So what should he do with Graphite Limited? Any view, any coverage on that particular company?
It is a commodity play. It is a very, very old company. When the cyclicals are in favor, the stock price do move higher. I mean, the profitability certainly dies. In case of Graphite, I would recommend to wait for another 6 months, hold for 6 months, and maybe you can take repeatedly review that.
Easy Trip Planners is the next counter that we're talking about, and Rajesh has got a question on this. He's writing in from Bengaluru. Vaishali, I'll come to you on this one. Ease My Trip bought at price of 36.5 rupees, which is slightly above the current market price. 1,200 shares, so significant quantity bought. Would you hold on? Would you average? What is the kind of target that you would look at?
I would not say, because the trend is down, and I think hold on till 30 levels. Because if 30 levels, this support breaks, then it can go down towards 26. So, well, I won't say to average out at least, but hold with a stop loss.
All right, so hold with a stop loss for Easy Trip as of now. The next question is from Sandeep from Hyderabad, and he's holding around 650 shares of, Jio Finance at 357 a piece. And he's asking whether he should hold for the next 3 months or not. So, Vaishali, I'll stick to you for this one. How does Jio Financial look on charts?
So Jio has been at a crucial support level. I mean, there's nothing much happening right now. The ideal support level is around 325. So the stock is also, it's lackluster. So this needs to go about 350 levels to show some strength and perhaps then go towards 375, 380. So I guess hold.
Kross Limited, I'm actually curious if you have a view on this one. Vishakha has got a question on this. It's only about 1,200 or thereabouts in terms of market capitalization, recent listing. It is, in fact, as I look at it, in manufacturing and forging components for OEMs in India, and I'm also looking at, so it's tractor components as well as truck and trailer components. Sort of familiar with the stock? Would you buy? It's down about 18% from the issue price.
See, it is a recent listing. I mean, recently the IPO has come. It is in the auto ancillary sector. But I would not be able to comment directly on the company. But what I would say is that because of the pressure we are seeing in the auto sector, there is more certainty that there will be pressure on the auto ancillaries also, because we are seeing fewer sales coming in in the Indian automobile industries. So for that matter, in that sense, I'll recommend to better exit.
Right, so if you got an allocation, you would still exit?
I'll recommend to exit.
Yeah, okay.
All right. Well, the next question is from Samresh Katare, who's from Jabalpur, MP. He's holding 100 shares of Zydus Life, purchased at 1,057 a piece. And he's asking whether he should hold them or sell them, and what's the target price if you want to keep holding them. So, Vaishali, I'll come to you for this one. Your view on Zydus Life?
So Zydus Life currently is in a corrective mode. Only consolation is that it has come on a 200-day moving average. But I think if these levels break, then it can slide down further towards 950, 940. So in my opinion, it's better to book partial profit.
Okay, Zydus Life, did we just take Zydus Life? Yes, we did. All right, we're going to take IREDA next from Rahul from Saundatti. He's bought at a price of 180. So he's still in the green, 3,250 units bought. What's the view on the fundamentals, Saurabh? IREDA prospects for significant loan growth were discussed earlier. Does that hold true?
See, that certainly holds true, but the stock has seen significantly re-rating. See, overall, I am very apprehensive on the valuations on the PSU baskets, and all the PSU got re-rated massively in the last 2-3 years, and we have seen only a bit of correction coming. In case of ADA, the IPO came at 30, the listing was at close to 60, and then stock gone to 300. The numbers coming from the companies are also good, but in that context also, I feel the valuations are still on the higher side. So you have to keep a view of more than 3 to 5 years to stick with it.
All right. Well, the next question, I believe, is on marine electricals. Now, this question is from Ananda. She's bought it at 273 a piece and currently incurring quite a significant loss, and she wants to understand whether she should keep holding this or she should sell it at the current levels, and the quantity that she's purchased is around 1100. So Vaishali, your view on this particular stock?
The long-term trend is intact. We are just seeing a minor consolidation. So I think this stock is ready for a new round of momentum. So keep a stop loss of 210. And once we see this stock moving above 260 levels, I think you will see further strength in this. So I think it's a positive view.
Okay. A positive view on marine electricals, which has done quite well, my goodness, over the last 6 months, doubler in the last 6 months itself. The next question is on Paradip Phosphate, and we've got a Bimal from Rajkot who's bought at levels of 85. The stock is currently trading just above that at 92. Saurabh, any fundamental view on Paradip Phosphates?
Yeah, I have not studied this company.
Okay. It's a market capitalization of about 7,500 crore. Vaishali, on the charts, I'm actually pulling up the year-to-date chart as I speak to you. It's up about 30% or thereabouts. Would you hold on?
I would definitely, because I think for a very long time, it's just showing some profit booking at 90 to 93. So it's a matter of time. Once we see the stock moving about 95 levels comfortably, I think this would be ready for a target of 110, 120. So I guess one should continue holding.
All right, the next question is from Santosh, who's from Maharashtra. His question is on Adani Ports. Now, he's bought 1450 shares. No, I believe that's wrong. I think 50 shares at a price of 1450. And he's asking whether, what should be the strategy with respect to this stock? What should be the support levels as well as target for this particular one? So, Vaishali, your view on how Adani Ports is looking on charts?
Just have a look. So Adani, actually it is a full Adani category. It's quite vulnerable to market. It's a high beta stock. So currently it is showing resistance at around 1430, 1450. So if the stock has to slide, it can go further on towards at least, I think, 1300 to 1280 levels. So I would say it is, one can keep a stop loss.
Okay. All right. Standard disclaimer here. Adani Ports is part of the Adani Group. NDTV is part of the Adani Groups, and NDTV Profit is owned by the NDTV Group. The next question is from Maharashtra. Indresh is writing in asking about the Bank of Maharashtra and whether it should be bought at the current level. He's asking for a short analysis on the fundamentals. Saurabh, how does it look?
The number reported were quite good. I mean, the bank has given a good guidance of net interest margin of in the range of 3.75 to 3.90. The NPAs are well contained. The loan book is well categorized, and there is very less chance of higher delinquency in case of their loan book. And they have taken higher provisions in case more delinquency happen in the future. So in that sense, I think the balance sheet is quite good, and the numbers reported were great. On the valuation side also, there is a good amount of comfort. If you have a horizon of, say, more than 1 year, then you can hold on to it.
All right. The next question is from Vinay, who's from Hyderabad. Now, he has 2,000 shares of IRB Infra bought at 69.5 a piece. And his question is whether he should average at the current price or should he keep holding these shares from a longer term perspective. So, Saurabh, your view on IRB Infra. Recently, it had taken a sharp hit on the back of the revision of toll news, but from a longer term perspective, is this a good stock to hold in the portfolio?
I think a lot of infrastructure activity do happens in the second half of the financial year. Many of the companies are able to garner good orders, and after these elections, we'll see some kind of more orders coming in. And IRB also, does the same work in this space. And I feel it is a temporary hangover, and things will price will settle down sooner. And in the next 6 months, we'll be able to see higher price. So in that sense, I'll suggest a hold on to it.
All right. We've got a question now next on HDFC Bank. This is an interesting one. Let's pull up the intraday chart, because when we started the program, this was one stock that was supporting the benchmark, and it continues to do so. It's up about 1% in trade today. On the technicals, though, Vaishali Sudha is asking, she's bought at a price of 1,540, which is actually a decent price to have bought it at if she did buy it within the last few months or so. She's looking to hold for at least another year. What are the prospects and what are the targets that you have?
Well, so if I'm looking at the weekly chart also, it's showing signs of recovery. So if long-term horizon it is, then I think continue holding, because when I'm looking at the weekly chart, I think the nearest target that one can see is 1800. Above that, it can go towards 1950 also. So I would say please hold.
All right. Well, Vaishali and Saurabh, thank you so much for taking out time and, of course, giving us those views on all the queries that were asked to NDTV Profit. And thank you so much for joining NDTV Profit. Well, with that, we now shift focus to Quick Heal. The stock has been a doubler on a year-to-date basis and has risen over 10% on a monthly basis as well. Now, due to its various product launches, however, it's under pressure today. We spoke to the Chief Executive Officer, Vishal Salvi, about the recent launch of antifraud.ai. Listen in to what he had to say.
Yeah, so this is a completely new category of product that we have launched after 3 decades in the cybersecurity industry and, having a very flagship product of antivirus, which is for B2C. We have now launched antivirus related product, but this is basically into anti-fraud, and it addresses the issue of the growing problem of frauds that are happening because of rapid digitization. This is the first time actually in 3 decades that we're creating a second category in our B2C product. So of course, we have great expectations in terms of how this will be adopted. And given that, it is something which is completely new in the Indian market, we expect that we will add significant value in terms of protecting customers from falling victims to the growing frauds.
Right, but can you just talk to us about how this might add to your revenue top line? Will it take time, or what quarter is this scheduled?
It has already started in the sense that we've already started dispatching the inventory to all our partners and resellers. And we've had a global pan-India launch across each of the regions where there has been very good participation from our partners to see the demand that can grow. So if, for all practical purposes, it's already now launched and we'll start, getting revenues recorded from this quarter onwards.
Got that. Okay, let me move on to talking about the revenue mix. Your focus gradually has been, moving towards enterprise customers from the consumer-based category. Like, for example, it was 20 to 18 FY21, and in the recent quarter, it has been around 43 to 57%. So can you tell us more about how this enterprise business is looking out for you? Is it more margin accretive, and why such a kind of shift, and what are your future plans?
Quick Heal has been, pioneers in cybersecurity and antivirus for many years. It has withstood the last 3 decades of innovation and changes which have happened, and we have a market position in terms of all the products that we have in B2C, and it was natural that we pivot towards enterprise security, and because of course there's a significant amount of growth, and in terms of the overall market that is growing as far as enterprise security is concerned, and also there are so many avenues to create value addition and different solutions which are coming up in the market. So Quick Heal has created an enterprise brand called Securite, and in that we have different product sets in terms of protection, detection, and prevention. And so we have a host of these solutions that we have introduced in the market, and we believe that's where the future growth will lie as far as the company is concerned. So the investments have been happening for over the past 7 or 8 years, and we are now at a position where we are able to see the benefits of that growth, which is where you can see that 40% of our revenues are coming from enterprise, and it's growing on a quarter-to-quarter basis.
Right. Okay, so let me talk to you about the margins. One doubt which I had is when you move to the B2B business, don't you think your negotiating power in terms of B2B business will go down because of the competition over there?
Yeah, I think, the market is fairly large. It is growing. The problem related to cybersecurity is only increasing because of the way in which we are adopting digital, cloud, AI, data, and so many regulations coming in and expectations. Obviously, organizations are facing a significant challenge, and there are many organizations who have adopted it, and there are many more organizations who are yet to adopt it. So I think the market is fairly large. There is still an untapped segment of customers who have not yet adopted cybersecurity in a holistic manner. And we are the only Indian Make in India story, right, where we argue well for Atmanirbhar Bharat and Make in India. And so, from that point of view, there's a humongous opportunity for a company like us who have been in the forefront of creating these solutions for many years, and now, really investing in various solutions for enterprise. So we do believe that, we have a huge amount of play as far as the market is concerned. And also, I think, enterprise business has great margins, and also there's a lot of predictability and consistency in terms of collections and other things. So therefore, I think it's a business that we believe is going to help us to grow and scale the company to a different level altogether.
Right. So as you said that enterprise business is more margin accretive. So can you just maybe qualify it in terms of a number?
Yeah, so we have not, shared these details publicly. And also, right now we are on silent period, so I won't be able to share much. But having said that, one of the things which I've definitely shared is that we believe and we have seen and observed that the enterprise business gives us better collections, better margins, and obviously better scale. So it's definitely an area where we are going to double down. We are investing significantly in innovation. We are one of the largest malware labs in the country. If not in country, I think it's also in this region as well. And we are doing a lot, in terms of adding new solutions. So we have already released Horizon 2 products, and now we are in the process of releasing Horizon 3, which is the new technologies and new solutions which are going to come in the future for enterprises.
Right. Okay. So what kind of mix do you see going forward for the enterprise and customer? Do you see like a 50-50 or even more coming from the enterprise?
Oh, definitely, it's going to be crossing 50 very soon, right? At the rate at which we are growing, we've moved from 2080 to already 40-60. And so, clearly, if you look at the market, 95% to 5 is the split between enterprise and the consumer globally. So obviously, that's a potential that we have, in terms of how we can grow and start getting our share. Of course, we are new to pivot to enterprise security, and so we have a way to go in terms of when we catch up there. But all the trends that we have seen the last 5 or 6 quarters, as far as the company is concerned, we are seeing the trajectory where every quarter we are consistently growing our enterprise pie of business, and that will continue to happen while we continue to strengthen our B2C and consumer business and the fact that we are now launching a new category of anti-fraud, which is very different from antivirus, is a demonstration that we continue to also focus on our core, which is our consumer business.
Right. Got that. Very interesting part on how you want to scale up the enterprise business. But let me talk to you about the Microsoft outage which happened recently. So these kind of outages which happen outside, do you look at it as an opportunity for you to pitch your solution to the enterprise and the customer, or give me some kind of color on how this can pose as an opportunity for you?
Yeah, I think one thing which has the Microsoft CrowdStrike outage has highlighted is the widespread importance of cybersecurity solutions in today's digital world, right? And you can imagine that one product going down can cause such a big impact to the world and the global markets. So obviously, it's a very important responsibility that every vendor, not just a cybersecurity vendor, but any vendor has in terms of making sure that the products are efficient and are working and do not create a denial of service to its customers. Obviously, this incident gives us an example of the importance of how the software updates that you release on your endpoints are critically to be tested properly before it is released to the market. So clearly, this is one example of how something can go wrong, and the world should know about it. It can happen to anyone, so we don't want to just say that, and criticize it, but I think we can learn from this. At the same time, we are extremely proud and happy to say that Quick Heal in its history has never faced such a challenge. We obviously manage 9 million endpoints across the globe, and we have never had a blue screen of that kind of an issue for so many years. And so we have a very robust testing methodology and how we do it, and we will continue to do that. We obviously always look at opportunities to how our products can add value to our customers, right. And we are seeing a strong uptake as far as that is concerned in the Indian context right now for enterprise business. Obviously every situation creates an opportunity for us. And in this case, our customers were happy that they never faced this problem because they were using our software.
Right. Got that. Very interesting. Of course, customers would now be more aware on how software is important. Software security is important. But one last question, because of crunch of time. Quick Heal has done immensely well, given more than 150% return in last 1 year. But I would want to know, what are your moats that you're looking forward to in the near term, at least for the next 3 to 4 quarters for our viewers?
Yeah, I think we have done... since the time, it's been now just about a year that I've come on board as a CEO of Quick Heal. And some of the changes that we are doing is in terms of, strengthening our leadership. So we've hired various leaders from different parts of the industry. And we're happy that we've been able to attract them. And, it is giving us a clear momentum in terms of, how we want to execute our strategy. As far as the sales is concerned, we've kind of re-energizing and reinventing our sales motion as far as enterprise sales is concerned. And so there's a significant amount of, addition in not just in the senior but mid-management level, as far as our enterprise sales is concerned. And the third is, I think, we kind of committed to our product roadmap, and Quick Heal has been at the center of innovation. We have 9 patents across cybersecurity, which not many people are aware of, and extremely proud of Indian company having 9 cybersecurity patents. And so the foundation of our company is innovation. and the malware lab that I talked about, having 100 plus researchers who are day in, day out looking at what's happening around the world in threat landscape. So we've kind of looking at how deep we can go in terms of and how we can monetize some of the knowledge that we have, which is very, very critical for today's world in terms of, disseminating that information and using that information to protect our customers and their, infrastructure from attacks. So that's really what we are doing in terms of, making sure that we have a clear roadmap of current as well as future, and we're reinvesting all our profits into that innovation and R&D. We are going to invest significantly in sales and, making sure that we have a good leadership team to drive that and driving the talent density of the organization. So these are some of the very important pivots which are, and we are going so well so far.
Right.
And we have a very long-term view in terms of how we want to, grow the organization.
Right. Thanks for that, Mr. Salvi. So a lot of investments lined up along with a strong leadership team, but because of crunch of time, we'll have to wrap this conversation. Thank you so much for joining NDTV Profit. All the very best to you for your second quarter results to be held on the 17th. Looking forward to hearing from you soon. Thank you.
Thank you so much.
Thank you, sir.
Good afternoon, welcome. You're watching Hot Money here on NDTV Profit. I'm Harsh Saita. With me is Rucha Somaya, and over the next half an hour, we'll try to speak about quite a few stocks which are buzzing. talk also to a management, get some context with regard to New Gen Software. What's happening on that one? Because the stock took a bit of a beating in trade yesterday. Also some management commentary coming through, but 0.5% lower on the Nifty 50 as we see it. Again, we saw start of the day, a lot of the gains from that point being given up on, and we're trading around 0.5% thereabouts lower. In terms of contributors, we have one of the heavyweights at least doing fairly well in trade. You have an HDFC Bank contributing well